Hey everyone, me Kevin here. We are going to have a big week of catalysts. Last week we had a really big week of catalysts as well, considering the fact that Amazon reported a consumer slowdown going into Q4. Google Ads reported a slowdown for advertising demand. We also saw Google in its Play Store and Apple on its services, like its App Store, recognize a slowdown with consumers here. GDP showed that the consumer last week is still relatively resilient in the face of higher interest rates, but that the savings rate that we're seeing from consumers is now below levels that we've seen pre-pandemic. And so we've got a big week of earnings to give us a lot of insight into how consumers might be faring going into Q4, but we'll also be getting the Federal Reserve and some other important data. So let's break down the week the way we've got to look at it. The first thing we look at is October 31st. And for October 31st, we actually really only have two important dates, and that is the expiration for the courses for a quick Halloween coupon we've done. This pricing will be better than Black Friday coupon codes, so get in before then. And then, of course, we have a house hack deadline for signing your documents. You can wire by November 4th. November 4th will be the wire deadline for House Hack, but get in by October 31st with your documents at househack.com. Okay, there really aren't any market catalysts on Monday, so we'll have a little bit of a relaxing Monday. November 1 is where things get interesting. First, we're going to have the beginning of the FOMC meeting. Now, the FOMC meeting, the first thing they're going to be able to discuss, that's a Federal Open Market Committee from the Fed, is going to be the JOLTS report. Now, the JOLTS report is an interesting one. It's the Job Opening and Labor Turnover Survey. And last JOLTS report, the last one that we got, came in nicely low at 10, which would be 10,025,000. And we're hoping that this number actually now comes all the way down to potentially 9.625, or maybe even misses to the downside. Now, according to Indeed, job openings have actually been inflecting to the upside, but a JOLTS survey right now of 9.6 is certainly moving in the right direction. If we get a number that comes in lower than this, I would expect prices and markets, equities to rally. And if we get a number that comes in higher than this and we miss to the upside, I would expect some red in markets. Remember, the reason we want to see this is because the Federal Reserve wants to see a one-to-one balance. So, for example, if I say we have 6 million people who are unemployed, but we've got 12 million job openings, that means we have 2 job openings for every unemployed person. We want to see more like 6 million job openings for 6 million unemployed folks. And that's directly from Jerome Powell at the Federal Reserve, right? This is pretty obvious and pretty clear. Then we will be getting some earnings on Tuesday, so we'll get to have some earnings fun together. So the first one that we're going to be getting is AMD. I'll tell you, what I'm looking for at AMD is really simple. I want to know what's going to happen with that China revenue. AMD has about 25% of its revenues coming from China, and after that Joe Biden chip ban for artificial intelligence style chips and supercomputing chips, I do think we've got some really big risks and uncertainties here for AMD. Depending on what they say, it could be a catalyst towards the up or downside. For Airbnb, we have a lot of anecdotal evidence, Airbnb, there we go, anecdotal evidence that Airbnbs are slowing down, that bookings are slowing down. So I want to see the bookings trend here. The last earnings call from Airbnb didn't suggest a booking slowdown. If anything, they suggested strength going into the third quarter. Let's see if that strength holds up with that consumer going into the fourth quarter. We do have Caesars Entertainment, which some are going to be looking at for travel demand. We have SoFi coming up. SoFi, I will say, I think this is an interesting one because SoFi has a lot of staff. And so I really want to see what their OpEx is looking like. They've got a lot of financial advisors on staff. They provide ETFs that are index-based, that have no cost. So they're not receiving any revenue from this. They've got stocks and crypto brokering, but again, they're receiving, in my guess, nominal revenues from this. I think it's been very difficult to attract new customers to these sorts of services unless you're offering a high yield on interest. For example, if I say go to metkevin.com/Webull and get up to 12 free stocks with Webull, I've actually seen a lower transition of users over to Webull. And for me, that's just a way of myself being able to have my finger on the pulse of the market in terms of How excited are people to get into new brokerages? So I wouldn't be surprised to see user growth. So I'll just put UG here, user growth, to slow down at SoFi, just because in this sort of market, it is slightly difficult to get people into the brokerage game and getting signed up for new accounts. We will be getting Uber. Not the biggest fan of Uber, mostly because you're collecting fees off other people doing the work, right? You've got the platform and the drivers are doing the driving, but they're independent. You've got a lot of risks related to independent contractor laws. So I think you've got a lot of those IRS risks are going to be a big overhang for Uber. We'll see what happens here regarding taxation. You've got Pfizer coming up. Pfizer, obviously, vaccines, mRNA vaccines, or something that might become more profitable for them as government subsidies go away, especially for those COVID vaccines. So we'll see some commentary on this. Simon Property Group, any potential lease negotiations for tenants who can no longer afford to pay their rent, as well as traffic updates. The Simon Property Group owns a lot of pretty incredible malls throughout the country, including one of my favorites, which is the Sawgrass Mills Mall in South Florida. Great area as well, Sunrise, Florida. BP expecting just record profits here, but really want to see their expansion into chargers, and EV, see if they're putting any more money into this space. You might think that's ironic, but they've got half as many chargers as Tesla does, which is really remarkable that they even have that many. I think it's like 16,000 charging stations. It's really, really incredible. That's then going to bring us to November 2nd, which is Wednesday, November 2nd. We have the FOMC meeting. Really what we're looking for from the Federal Reserve is any kind of hint at a slowdown, right? Now, I really don't think, unless we get like a really killer JOLTS report, that we're going to hear anything. So I'm not too optimistic in this idea of a pivot or pause talk. I think we're going to be looking for hints of maybe 50 in December, which we might get. But I also think they're going to keep the 50 in December optionality open because most of the data comes after this meeting. So I think the Fed has a real risk of talking the market up in November, on the November 2nd meeting, which in my opinion means I think we're going to see a rougher Jerome Powell because he needs to keep the market down. Because if, for example, Treasury yields fall and the stocks rise, you actually loosen financial conditions, which just leads to more spending, and that's not what the Federal Reserve wants. They want to keep yields high at the treasuries, at treasuries level. They want to keep mortgage rates high. They want to keep the stock market down. That's how they keep financial conditions tight to get rid of inflation. I really don't think it would be wise for them to really imply pivot or pause. I think they want to just reiterate, data dependent. We haven't seen it yet, and we might see some red because of that, but hopefully that unlocks them to be a little bit chiller in December. But I don't think this is their meeting for really giving us any kind of excitement. I think it would be a mistake for them to do so. You're going to see eXp report. This is the real estate agent company. Look, I'm not at all enthusiastic about this. I think we know transactions are down 30%. They make money by taking a certain portion of real estate agents' commissions. I think they're a great company to hang your license with if you are a real estate agent who already has experience. In fact, you can go to metkevin.com/EXP and sign up for eXp Realty, okay? And they'll give me a thank you for you doing that. Lauren has her license hung with eXp. But let me be clear, if transactions go down, revenues for eXp, I think, are going to go down. Now, that might already be priced in, but we'll see what happens. We're going to get Vista Outdoors. How are those bullet sales basically coming up on an election going to be doing? Fisker is going to be reporting. I'm not sure if that's actually Fisker's ticker symbol, but whatever. Fisker is going to be reporting. You've got Zillow, the Zillow Group reporting. This one I really think is going to be sad because when real estate transactions are down, real estate agents start getting nervous and you might think, oh, they're advertising more to get more business. But when it becomes hard to advertise is when the market's hard. And so you actually tend to advertise less, even though advertising less probably means more business for you as an agent. It's just a time when people tend to hold on to the cash they have. And that's bad for Zillow's main source of income, which is not flipping houses anymore since they killed that unprofitable business. Anybody could have told them that was going to be an unprofitable business. But from real estate agents, probably not going to see such great spending here, so I'm not optimistic about that one. Robinhood might actually surprise decently to the upside with their 3% interest on gold deposits. In fact, Robinhood gold deposits. No, it's not actual gold deposits. But if you go to metkevin.com/Robinhood, you could sign up and get the 3% on your cash deposits at Robinhood, which is kind of cool. I mean, on cash, stuff that you have money readily available for or liquidity with, I think that's actually an incredible offer. I'm considering putting a bunch of money over here into Robinhood as well, so I don't have to deal with moving treasuries around, and I got a little bit quicker and more flexible liquidity. It's much better than sitting in the bank over here. We're going to have Etsy. Etsy is such a great company, but I hate to say it, sellers on here do not have a lot of PP, pricing power. Not seeing a lot of PP by sellers in Etsy. I don't think that'll change in this next earnings report, but we'll see. Same thing I would expect to be true over at eBay. And then we'll get Qualcomm. We'll see how they're doing without Apple as much of a client. Roku, I think this one's just set up for a disaster. I'm not the biggest fan of Roku getting into the TV business. In other words, we know that they're software for TV, but they're actually getting into building their own TVs. And I think the CapEx spending on getting into that is going to be disastrous. Not optimistic here at all. If I had to pick something I was most optimistic on, I hate to say it, but probably Robinhood. Otherwise, I'm just not very optimistic about any of these. Now, on November 3rd and 4th, I do get to some things that I think I could be a little bit more optimistic about. So let's go ahead and draw over here. November 3rd. What do we got for November 3rd? Well, we've got American Homes for Rent. I'd like to see them actually reduce their purchases because this is a competitor to HouseHack. We will actually have Carvana reporting. Carvana, Shift, the used car space. Look, we knew for over a year to get out of these. I've talked about it in many videos. You don't want to be in a used car seller when there's a used car shortage. So as long as there's been a used car shortage, I've been not interested in these stocks because these stocks make money off of volume. It's kind of like eXp real estate. Volume goes down, your fees go down. Volume going down bad. So, now we're starting to see used car prices fall and still have shortages. I mean, it's just a double whammy. Not very excited here. Cloudflare, though, also known as ticker symbol NET, optimistic here. I personally am excited about this one. This is one that I would be paying attention to. Coinbase, no, not very excited here. Although there's been some Dogecoin spiking here lately with Twitter taken over or being taken over by Elon Musk. Not very excited about how many transactions we would expect from Coinbase. It's really going to take a rally in the crypto market to see people move back over here. Corsair, one of the problems with Corsair, I don't remember exactly what their ticker is, CSR, something like this. Corsair peripherals for PCs, look, we're down 19% in the PC market. There's not a lot of reason to be optimistic here, but will we see a potential consumer inflection point, and could that be a lead-in for some of the other PC manufacturers? Maybe, we'll see. Dropbox, are they actually going to be able to increase their share of pie? So I want to see how much of sort of the percent of TAM they've been able to grow. I haven't been the most optimistic about this company, but we'll see. EXP, look, sorry, this is not EXP, this is actually Expedia, I should say. Expedia, which means actually that is EXPI. There we go. Expedia, travel, I don't recommend them for booking, but they kill it with revenues. A lot of people use them, and I have to say, travel has been absolutely booming. So I think their historical returns here, or their historical revenues looking back, should be pretty dang strong, but their forecast is going to be everything. So I'm going to write down forecast on that one. How is that travel demand holding up? So far, the airlines are telling us pretty dang well. GoDaddy is an interesting one just to watch how entrepreneurs are doing in terms of starting businesses. We are going to have Hyatt. Hyatt's an interesting one on November 3rd because it tells me a little bit about business travel or sort of a high-end level of travel. Is that high-end starting to slow down? We haven't really seen a high-end slowdown yet. You've got MP Materials reporting. How are we doing on those rare earth metals for electric vehicle motors? any increase in sort of how many of these we're able to, or how many units of sort of rare earth materials we're able to manufacture or refine, and then how are our partnership deals going? How about expansion deals? They're located in California. I think they're a great company run by a great CEO. Open Door, honestly, like I'm happy about MP, but Open Door is just terrible. I think they deserve to go bankrupt. I am excited to see those financials because I want to read the red flags. Peloton is having a complete disaster. There's a reason I sold Peloton at $113 and advocated for doing so on YouTube, in live streams and videos and course member live streams. Everything was saying this phase is over. And I was recently reading some consumer spending reports, and I'll tell you, fitness is like the lowest right now. It's just not an exciting space to be in. But you really got to see, how is that new CEO trying to turn around the reputation for that company? So I think that's a big deal. PayPal's been having some recent drama. They're going to be reporting in terms of $2,500 fees for potential misinformation commentary. Whew, I want to see if they end up getting any kind of hits to user growth on that front. Under Armour is a company that generally has had a lot of pricing power. How is their PP holding up? Are they having to go into discounting the way Nike has been going into discounting? Judging by services sort of declining, I would expect that Twilio is probably going to be a sad face. And I hate to say it, but investment into home furniture via companies like Wayfair, probably not expecting an inflection point here anytime soon. November 4th is your wire deadline for HouseHack. Not only is it your wire deadline for HouseHack to get your October options, but it's when we expect the unemployment rate to come in at 3.6%, average hourly earnings to be up 0.3%. That would be about also 3.6% on the year over year. Average hourly earnings expected to be 4.7%. And participation up to 62.4%. If we have an unemployment rate here that comes in higher than expected, it would actually encourage stocks, and we want this number here, that month-over-month inflation rate, to come in lower than expected. It's going to be very, very important. All right, folks, there you have it. If you found this video helpful, consider sharing it. Thank you so much for watching, and we'll see you in the next one.